Here's something that just doesn't add up. On one side, you've got Amazon, a company making absolutely staggering profits. But on the other, you've got tens of thousands of their corporate employees getting pink slips. It's a huge paradox that, on the surface, makes zero sense. So today, we're going to untangle this whole thing. Amazon's $6.5 billion paradox.
First, let's just wrap our heads around the numbers here. Between late 2022 and early 2023, Amazon cut about 30,000 corporate jobs. Now, to be clear, that's not warehouse workers. That's their corporate and tech workforce. That's roughly 10% of their entire corporate staff gone. A truly massive number.
But get this, at the exact same time, the company posts a net profit of $21.2 billion. And that's not for a whole year. That was for a single quarter. It was a 38% jump from the year before. Just unbelievable. And of course, that leads us right to the big question.
Why? I mean, why would a company that's more profitable than ever decide to carry out one of the biggest layoffs in its history? That's the core mystery we're going to solve by digging into the source material here.
So let's start with the official story. What was the reason Amazon actually gave for making these cuts? What did they tell everyone?
Well, the official line from CEO Andy Jassy was that it was all about a cultural reset. The idea was that they'd hired way too many people during the pandemic, and the company got, well, bloated, too bureaucratic. The layoffs, he said, were about getting lean and fast again, trying to recapture that scrappy startup culture.
And that sounds plausible. But let's be real. Saving an estimated $6.5 billion a year in salary is a pretty big motivator too. So is this really just about trimming some fat, or is there something else going on? Something hidden deep in the company's financial reports?
All right, now this is where things get really interesting. Because once you look past those flashy headline profit numbers and actually decode the financials, a totally different story starts to take shape.
So you look at this table, right? And the top two lines look amazing. Revenue is up, net income is way up. The core business is firing on all cylinders. But then you hit that third line, free cash flow. And it's not just down a little. It's a negative 4.8 times billion dollars. The company is literally burning through cash. So what on earth is free cash flow, and why is this number so important?
Okay, simply put, free cash flow is maybe the most honest metric of a company's health. It's the actual, real cash they have left after paying all the bills to keep the lights on, and after making any big investments for the future. It's the money you can actually spend, save, or give back to shareholders. It's the real deal.
And this right here is the heart of the paradox. The money coming in from their regular business, selling stuff and running AWS, is super strong. But all of that cash and then some is being drained away by some massive spending. And that spending isn't a problem they're trying to fix. It's a deliberate, colossal bet on the future.
In that bet, the real reason for the cash drain and, as it turns out, the layoffs, is a gigantic company-wide pivot into one single area: artificial intelligence.
Remember that capital expenditure line from the financials? Well, in 2025, it exploded to $125 billion. That is just an almost unbelievable amount of money to be spending. So where is it all going?
And here's the answer. A whopping 75% of that huge number is being poured directly into building AI infrastructure. We're talking new data centers, mountains of powerful computer chips and GPUs, the whole 9 yards. This isn't just a side project. It's a fundamental shift in what Amazon is.
So let's put it all together. What's happening here is a straight-up trade. Amazon is taking the $6.5 billion it's saving every year by not paying those 30,000 employees, and they are converting it directly into silicon. They are trading human brain power for computational power.
And this isn't just numbers on a spreadsheet. This is having a very real impact on the ground. Let's actually meet the new workforce that all this AI investment is busy building.
I mean, look at this list. We've got robotic arms named Blue Jay, humanoid robots called Digit that can literally carry packages, scout robots delivering things on the sidewalk, Prime air drones flying overhead, and even Zoox self-driving taxis on the streets. This is what a $125 billion investment looks like.
And this might be the most jaw-dropping number of them all. This isn't just about the 30,000 jobs they've already cut. Turns out there's an internal plan that shows Amazon expects to avoid hiring for 160,000 future jobs by 2027, all thanks to these new AI and automation efficiencies.